Hello traders, and welcome to the second video within the second section of the IPA Traders Private Mentorship. Now you should understand that this section is entirely dedicated to points of interest, and we're going to be doing a quick summary of what you should understand at this point, just so I can make sure everyone is being led in the right direction and nobody is left behind. So guys, before we proceed with more information and more content, let me actually do a quick summary. So far you should understand about points of interest, that a point of interest is nothing more than a specific price point in the chart that you're willing to watch for potential executions, right? And the potential word is important here because we do have more protocols in place that are then going to confirm our point of interest and validate those to then really execute your positions, right? So, whoops, my bad. Let me get rid of this. So you actually learned about the order block in the previous video specifically, right? I told you that there were multiple points of interest, and so far you understand the order block, which is essentially a move through liquidity in the opposite direction that leads into some sort of break in market structure and leaves behind that down move before the up move that you're willing to watch, right? You should also understand that those areas can be refined, and the refinement is absolutely up to you, right? You can imagine, for example, this is a 4-hour point of interest, this entire down move before the up move. And you should understand that you can and you're allowed to go into lower time frames, for example, a 30-minute, and refine that same point of interest to a even lower down candle before an up candle, right? And that's absolutely valid and correct. However, you should also understand that the more you refine a point of interest, the lower the probability that specific point of interest is going to get hit, right? Price could return here, just hit the 4-hour or potentially a 1-hour point of interest and never tap into the 30-minute and push higher, and you miss the trade. So the refinement is completely up to you. However, do not worry, I will be giving you some more ideas on refinements and that sort of stuff. You should also understand that up till this point, everything you've learned about points of interest is about specifically the order block, right? And reason being is because order block is essentially the most important point of interest that you're going to be using, as all the different ones, as the rest of those are essentially variations of order blocks. So I want to make sure that you understand order blocks very well. And for that reason, we're going to start off this video further discussing order blocks and more ideas around those, as those really are the keys to your points of interest, and the rest of points of interest are just variations of order blocks. So with that out of the way, let's actually get started with more information regarding order blocks. So traders, let's head right back to the drawing board and let's continue discussing stuff. So as I said before, we're going to be further talking about order blocks, as those are the most important points of interest that you want to learn about. And let me actually go ahead and introduce you an idea that is called last point of true mitigation, which is essentially explained in the YouTube channel, but we're going to be diving into more detail, and let's actually do that, right? We're going to be learning about last point of true mitigation, which some people really call OBs 2.0s, but let me actually explain you the logic behind this concept right here. So let's imagine, right, that you have a market that looks like this. Let me redraw it just so I can illustrate my point better. Okay, this right here, you have a market that looks like this. Now you should understand at this point that this entire down move before the up move, and let me highlight that, this entire down move for the up move is your order block. As we sort of break structure over here, we leave behind that up move before the down move, and as you can see, price returns over here into that OB and moves higher, right? So you should also understand that you could have potentially refined this order block to a section over here, right, as you zoom into lower time frames. And as you can see, price trades into that and moves higher and breaks structure again. Great, guys. This is what we now call a last point of true mitigation, this exact price point over here, or order block 2.0. It's really up to you and whatever you want to use as a term. So we understand now that, hey, we had a move up, we left behind an order block, we came back down, we mitigated that, and we moved higher again. Now this means that this is a very high probability order block. If I'm being honest, guys, this is the order blocks that you want to trade. Again, there's more rules to order blocks, but for now, this last down move before an up move is a valid order block for you to watch, and it's going to be a very high probability. And reason being is because the market is showing you that as price came back down here, right, and mitigated, it couldn't break below that order block. So the order block that was left behind essentially signifies bank interest really wanting to hold price above this area right here, because if they didn't want to hold price above this area, they would have very well traded below this order block and maybe reach into some deeper order blocks below here, right? But they didn't do that. Matter of fact, they traded here and moved higher. And once, and this is important, the rule here is once this mitigation right here, this mitigation play breaks structure over here once again, that means that this order block becomes valid, right? And let me remove some stuff because once again it's getting pretty messy. Let me choose a different color. So once again, guys, this entire up move, down move before the up move is your order block. However, if you see an order block like this where it's huge and really not efficient to trade, you would really want to refine that, and you would, in order to do so, you would go into lower time frames and keep refining and refining. Maybe you end up with an area like this, and this is now a very high probability order block because this is stems from a mitigation. So now you could very well expect that price is going to return back down right here. It's going to hit that order block 2.0 or last point of true mitigation, whatever you want to call it, and then it's going to proceed and move higher, right? So this is the idea that I wanted to show you in regards to order blocks. So we're going to be going back into the charts, and we're going to be taking a look into actual candles so that I can ensure that you understand what I just told you about order blocks 2.0s right here. So let's go back like this, and as we can see, guys, following the principle that I just told you, this is a valid order block because we break structure. So you could have potentially been watching this, and let's imagine that you missed your entry, right? You wanted to monitor that price over here, but you were not sure, or whatever it may be, you didn't execute, right? And now you're left behind and you see that price is pushing higher. Well, you do not have to worry, as price is likely at some point in time to come back down. And now we can see that the order block 2.0 or last point of true mitigation that was left behind could look something like this, right? You always want to keep for bullish order blocks, guys, you always want to keep the lower boundary as it is, right? As it is. You can refine the upper boundary as you move through time frames, but the lower boundary of your order block, you don't want to touch it for bullish order blocks, right? And the opposite thing would be valid for bearish order blocks, right? If you have a bearish order block like this right here, right? This up move before the down move, you have to include wicks, just like we see over here, and that upper boundary, you don't want to be squeezing it down because that's really nonsense. This is part of the order block regardless of how deep price may want to mitigate into that block, right? So the upper boundary for bearish order blocks, you don't want to touch it. However, you can refine the lower boundary over here as you flick through time frames, right? And we're going to be doing an example. So this is an absolutely valid 8-hour order block. However, if I go to a 3-hour time frame and actually go back in time, hopefully that specific price point is still visible. It is great. Let me see if we can refine, right? And I don't know if the 3 hours is going to provide me a better refinement. And as you can see, we sort of can move it up here, and now our order block and point of interest is getting smaller, and that's going to be easier for you to then frame your trade ideas around that, right? So let me go back again one more time. Hopefully I can still look at the 1 hour time frame. Hopefully. Oh, I cannot. Maybe a 2 hour. Maybe a 2 hour is going to be fine. Let's see. Yes, we can watch a 2 hour. Okay. So as you can see, the 2 hour order block is not offering us any refinement, right? There's no refinement to be done because we don't really have a up candle that is higher, right? We cannot move the lower boundary up. So there's really no refinement to be done here. However, the upper boundary, you never want to touch that one, right? You would leave it like this. So that's in regards to refinement, right? And if we keep following price, as I told you before, this is a valid order block on itself, and this is a order block where you could expect price to trade back into and potentially move higher, right? With proper confirmation, proper structure plays, and proper liquidity grabs. However, so far you should understand that as price comes back, mitigates this block and breaks structure again, right? We break structure over here. Let me actually do this, break structure to the upside. This now becomes a last point of true mitigation, this order block right here. And again, guys, do not get confused. This entire region is an order block on the 8 hour. We're just now looking at it on the 2 hour, and that's why you see more candles and more messy price action, right? But I really wish I could go lower time frame to illustrate that. Hopefully, I think I should be able if I do some sort of trick. I have an idea over here. Just give me a second. So if I go back over here and I use my replay tool, maybe something like this, I may be able to refine my order block. Oh, data point unavailable. Okay, that's fine, guys. Do not worry. Let me get rid of this and let's go back. Let's go back to the 8 hour. Okay, now you understand that this is your last point of true mitigation. We can go ahead and label last point of true mitigation slash order block 2.0. And this is a point of interest that is pretty powerful. However, you should never trade them just as they are. You should always look to confirm and have as many confluences as possible with further ideas that you are going to be learning throughout the sections, right? So if we follow price, right, we now understand that, hey, this is a order block that stems from a previous mitigation, so this is a high probability one. Let's actually drag it across and let's see what happens here. So as you can see, guys, price comes back here, trades into it, moves away. There's potential buys to be made here, right? You can see this provides you a 170 pip move. There's room here to profit, but it never actually went ahead and breaks higher. It fails at this point, right? And if you were to look into lower time frames, you could potentially catch an entry over there, but that's not really something that we're going to be focusing now. So we continue following price, guys, and we're just going to be doing that exercise, really. We're going to be following price so that you start, your brain starts getting used to the idea of looking for order blocks 2.0s or last points of true mitigations, as those are going to be very powerful. And do not stress, every single type of different point of interest is going to be covered, but the idea of order blocks is essential for your point of interest understanding, because really every other point of interest really is a variation of the order block, right? So let's continue following price, right? As we can see, we had a up move before a down move. That is a valid bearish order block, and we understand that we can refine the lower boundary over here, right? This can be refined as you flick through time frames, but the upper boundary, you never want to touch that one, because that's really a part of the order block, and you're essentially not drawing it correctly if you start touching it, if you start touching and playing with the upper boundary. So price moves down, trades back in, and moves lower. Let's continue over here. So we see that this is also a order block, right? And if you want to use the entire down candle before the up candle, that's absolutely up to you. But what you need to understand is that this is a valid order block, this is a valid order block, this is a valid order block, and this is a valid order block, right? I suggest you always include wicks, but you don't need to use the entire section, because following the logic, you could potentially use the entire section over here, but you want to make it easy on yourself, so I would suggest you refine it to an area where you're comfortable working with, right? Something like this would be something I'm comfortable with. So let's continue. Let's see if we actually ever get a tab back into this area and what actually happens over here. So as you can see, right, price trades back into it, mitigates even deeper. That means that if we had the ability to zoom into lower time frames, you could potentially see a let me get rid of this, remove this stuff, and let me illustrate this idea. If we were to zoom into a lower time frame, you could potentially see something like this, right? Let me get red. You could see a down candle over here, right? Just imagine it doesn't actually break the lower end of the range, and then you see the huge candles moving up, just like that. So now you understand that, hey, price mitigated deeper to our right hand side because there may have been a lower time frame order block sitting over here and they wanted to hit that, right? So that's that. And as we can see, price comes back into, mitigates deep, almost breaks it, but then moves away. And again, this is pips that you can catch, right? This is good moves. Let's actually measure this. You get a 170 pip reaction before it actually trades below it, breaks structure, and comes back again to mitigate the bearish order block that is sitting over here, right? If we were to draw it across this entire section, as we said before, we want to be including wicks, is a bearish order block, right? This right here is, however, this on its own is also an order block, right? So there's multiple variations. It's just a matter of what's comfortable for you and what you seem, what looks logical for you, right? So we do that, we follow price, and as you can see, price reacts here. Great. Now we can further see what's happening over here. This on its own, this huge wick right here is an order block 2.0 or last point of true mitigation, sorry. And the reason being is because this order block mitigated a previous order block, right? We can see it over here. This was a previous order block. Price came over here, mitigated it, moved aggressively away, and broke structure to the upside, to the downside, sorry, over here. So this becomes a new order block and a high probability order block because this is a order block 2.0 or last point of true mitigation. Last point of true mitigation. And really, I'm just showing you examples back and forth because it's going to be very useful for you and for your understanding. This is not something that you instantly start to see in the charts, but the more you work through charts, the more hours you spend, the more you watch the videos, the better it's going to be for you to understand this stuff. So we see that we move lower, and we return to this area, right? And there's some sort of clues on why this mitigation actually worked so well, but that's a topic for a different video. So far, we see that price returns and leaves. Why? Because there are orders over here from smart money that need to be closed, and hence we return over here, we close them out, we relieve them at break even, and then they continue in that given direction that in this case was clearly bearish. Great, let's continue following price. So we can see we have an order block over here, price mitigates it, right? We can see we trade above it, we leave some sort of imbalance, and for you guys that don't know what imbalance is basically this right here, right? The gap in between wicks. This is considered your imbalance, which means that price only offered buy side at that point, and that needs to be eventually rebalanced out with sell side, which is essentially what we provide over here. And that's what we do. We trade back into the order block and we move higher. Great. Now we understand that this is a order block 2.0. Right here, this last down candle before the up move, or you could use this last 2 candles before the up move, or the last 3 candles before the up move, right? That is essentially up to you. But I would always try to use order blocks that have not seen any previous mitigations before, right? Because if we look at this example and you use this specific order block, you can see that we trade above it over here, right? The moment we trade above it, that's a valid order block, but we come right back down, we leave a wick over here, which means that orders have been taken out at this point. So it essentially loses power and confidence as a order block, which means that you don't necessarily want to be using those, right? I would much rather use this section right here because I have more confluences to use this one, right? I can say to myself, hey, we've got imbalance over here, so price may want to fill this offering sell side, plus it has not seen any mitigation, so it is a very high probability order block. Also, this order block mitigated this previous order block, so it's getting even higher and higher probability, right? So let's get rid of some of this stuff. And let's draw this order block across. And once again, we're just doing this exercise to get your mind thinking and to really see how order blocks look and how order blocks play out. Is this recent price action? No. Okay, we just gap up and we never really come back down. So that order block never gets traded into, and that's fine. That's going to be fine. But that doesn't mean that this is not a valid point of interest to watch for, right? This is an absolutely valid point of interest. You just need to understand that order blocks and points of interest can be left behind for years, months, weeks, right? Depending on the time frame you're looking at, and they don't need to get instantly mitigated. So let's actually see what happens over here. Okay, we move higher. We're just trending really very high up, so there's not much to see over there. So what we're going to be doing now is essentially going back to recent price action so that I can show you the ideas of refinements, right? Because those are going to be very important for you, and it's essentially something that is going to be very helpful, because what you will find is that sometimes order blocks can look very exaggerated. For example, let me see a good example. This is actually okay. I need a better example. Yes, this is a better example right here, right? You may find that, hey, this is an order block right here, this entire region, and this is a, let's see, a 270 pip zone. And you don't really want to be working with a 270 pip zone because there's going to be too much price action happening over here and you're going to get very confused, right? So you want to learn how to properly refine those order blocks, right? So we're going to be moving into recent price action, which is essentially right here. So just to give you an example, we're watching EU, and this right here is a valid order block that I would actually go ahead and watch because it's sitting at a origin over here, right? This is the last up move before the down move that broke this structure right here. So a story that I could really tell myself is that, hey, we just made a low, we are retracing, and we're potentially aiming for this order block to then continue lower, right? I wouldn't just place a sell limit over here and put my stop loss above it. No, that's not something I would do. I would actually go ahead and wait for price to hit my POI and then look for confirmations in lower time frames to potentially execute sales, right? So let's actually flick through time frames. Let's say we go to a 6-hour time frame. Oh, can I go to a 6-hour time frame? Yes. So as we can see, there's really no more refinement to be done, right? Actually, it tells us that the order block is over here, and this order block on the 6-hour has been mitigated, so I wouldn't be using this order block, right? It's not really efficient. Let's move into a 5-hour. Not really again, right? We see that our order block is getting bigger, and again, we don't want to be touching the upper boundary. On a bearish order block, we want to be reducing the lower boundary until we're confident and comfortable with what we have, right? So let's go to a 4-hour time frame. Let's see. Okay, the 4-hour offers us this order block, but this order block has once again been mitigated, so not too useful. 3-hour. Not really. 2-hour. Yes, the 2-hour offers us a great refinement. Now we've turned our zone from this entire region over here. Now our order block is this region right here, which is now a 20 pip move. A 20 pip zone. And this is actually pretty good to work with, right? But again, depends on the time frames that you want to use for your trading and how comfortable you feel with those, right? But let's keep refining. 1 hour, not really. 45-minute offers us this order block right here, but this order block has already been mitigated over here, right? It has already traded into that. So really the probability of this order block getting hit is low because that area has already been tested. So let's move even lower. 30-minute offers us this order block right here, which is essentially the same scenario as the previous one because it has already been mitigated. Let's move into the 15-minute. 15-minute offers us this one right here. This one has already been mitigated. It doesn't mean it's not valid. It just means that the probability is decreasing. So let's move into a 5-minute. And let's see if we can find a very clean order block. 5-minute offers us this up move before the down move right here. I would go ahead and use that. And really what I would see at this point is, hey, we had this order block, we moved down, we came right back up, right? We mitigated it over here, we moved away, and we came back up one more time, and then we moved away, right? So what can I see here? I can see that another order block was left behind, and this one actually has imbalance over here, which is a good sign, right? We have imbalance over here, so there's reasons for price and smart money to want to trade back into here before moving into a certain direction, right? So we see that. We can now actually use this order block right here, right? And I know I'm taking my time with order blocks 2.0, sorry, but this is important for you guys. So this is an area that I would actually want to watch. And this is something that I would be waiting for, right? Right here in this chart. I would then go back to my 1 hour. I would remove this one. I would keep the upper boundary if I'm being honest, and I would just use an area like this. And this is something that I would place something like this on, right? And I would say to myself, hey, if price comes back up here and does something that I like in regards to lower time frame shift, I would then be happy to take sales, because with probability, this is a origin, this is where order flow is currently holding, and this is where I can expect some sort of mitigation play to potentially move lower. So traders, at this point, you should understand very well what a order block is, right? Whether that be bullish or bearish. You should also understand that a last point of true mitigation or a order block 2.0 is very high probability. However, we do have some more rules, and we're going to be getting into that in future videos. So do not stress if there are gaps within your learning. That's okay. I believe everything is going to get filled, and even if it does not, you can always talk to me via Discord. You can use the chats, you can engage with traders. Let's actually build a strong community where people come in, can ask questions, can leave with good information, and can really improve their trading, right? That's really the aim here. I'm trying to create as many profitable traders as possible, because that's going to be beneficial for me, and that's going to be beneficial for you. So let's actually go back to the drawing board and let me summarize what you've learned today and sort of the main takeaways, right? So let me grab red and let's say main ideas. You should understand that we talked about last points of true mitigations, which are also called OBs 2.0s, and this is really up to you, the term that you want to use. I mean, for sake of simplicity, you would actually go ahead and use OB 2.0s, but this is also valid, and this actually refers to the order flow, and that's the reason why this term actually exists and makes sense. So let's actually go ahead and draw a scenario, right, that you should very well understand at this point. So let's do something like this. Something like this. You should now very well understand and really be able to identify that this region right here is your order block, that this order block can very well be refined to a lower end area, right? You could potentially use a lower end area, and you would always want to prioritize order blocks that have imbalances on top of them, because that gives you a clue on why price may want to return there. And you should never really touch the lower boundary. Whoops, let me actually grab the arrow tool. You should never really touch the lower boundary of a bullish order block. However, you are free to play around with the higher boundary as you wish, right? This is absolutely up to preference. If you're comfortable working in a 20 pip zone, you can do that. If you're comfortable working with this entire order block, for example, right? Let's say that you actually prefer to use this entire region. That means that you're going to need to have more patience as you watch price develop inside your point of interest, but that's also valid, right? And let's actually quickly do the inverse for the bearish order block. Could look potentially something like this. Right, you understand that the moment we trade below it, it means that we now have a valid bearish order block, which is essentially this entire region, which you can actually refine to a more specific up move before down move that may have potentially imbalances on the way up, and that you should never really play with the upper boundary over here, because this is always going to be part of your order block, and if you're playing with that, you're not really identifying the right order block, and you're not getting the idea of an order block, right? So you understand that. You also understand that you can play with the lower boundary as you wish, and you are going to be doing that by flicking through multiple time frames and choosing whatever fits you and fits your needs within trading in regards to a pip zone amount that you want to play with. So these are the main takeaways here, guys, and do not stress, do not worry. We're going to be getting into the different types of points of interest, but order block is really the essential one. It's really the sort of important one. So all the others point of interest are going to be deviations from order blocks, so keep that in mind. For now, take notes, rewatch the video if needed, and I will see you guys in the next video. But before we do that, let's actually go one more time to the drawing board so that I can show you that, hey, for example, this right here, right? Even though it's an order block, it also is a IFC structure, right? And that's something that we're going to be learning in future videos. But just to leave you with some sort of more information, this is called an IFC structure, and this is a variation of an order block, and you're going to be learning that today. At the same time, if we go to a slightly lower, this right here is also a valid point of interest, right? This entire, even though it's just a black candle, this right here is also a valid point of interest, and we're going to be learning about those in future videos as well. So until next video, guys, I wish you good trading. I really wish you can really take the time with the videos, study, and I will see you soon.